Let me show you how you can really earn, keyword earn, $50,000 tax-free every year. However, there is one condition. You need to have $1.75 million in your portfolio. Let's break this down. Cue the intro. If you're new to my channel, I have a system for you. With every topic I cover, there will be a 10, 5, 1 minute video. 10 plus minute video topic will be covered in depth with a lot of explanation, example, pictures, and animation. 5-minute videos are more condensed. Less talking, less pictures, to the point. 1-minute videos are your skeletons. Simple, summarize, and serve as a refresher for already learned material. There will be a quiz at the end of each video to consolidate your education. I value my time, therefore I respect your time. Don't waste precious minutes searching and relearning old material. It's 2020, it's time for a new approach in education. Hopefully this helped. With that being said, let's get it. Alright my fellow money lovers, for this video to make any sense, you need to learn the following topics. Stocks or shares, dividends, the standard tax deduction, capital gains, and the progressive tax system. Let's jump into it. Stocks, shares, equities, securities, and stock ownership. These terms are basically the same. It means you own a piece of a company. When you buy a share, you're essentially buying a piece of a company. The reason why companies want to sell their piece of their business is because they want to raise money to fund their projects, inventions, or day-to-day expenses. Now, stock prices fluctuate based on how well they do business year to year. Now, let's talk about dividends. Dividends are payment given to you as a shareholder. It'll be like this. If you buy a stock in the stock market, let's say it's Raytheon. You hold on to that stock, that means not selling, and every quarter that company will pay you a portion of their profits. That means you could be chilling in the Bahamas, sipping piña coladas on the beach, doing nothing, and you get paid dividends every single 3 months. Now, you can set up your stock portfolio where you could get paid dividends every single month, but that's a video for another time. Let's move on. Next, you need to learn and understand a little bit about your taxes and your tax bracket. For example, Adam, say he works at Target and earns himself $20,000 a year. Now, that would place Adam in the 12% tax bracket. So $20,000 times 12%, that will get you $2,400, right? This is where a lot of people get it wrong. Check it out. According to the current USA IRS revenue procedure of 2019, a single taxpayer with an income over $9,875 is taxed 10% of $9,875. The excess amount is then taxed 12%. The USA has a taxation system called the progressive tax method, where a part of your income is taxed at different key points. For example, alright, let's bring back Adam. Adam has an income of $20,000. He is placed in the 12% tax bracket. First, you need to subtract $9,875 from $20,000 because he is placed one tax bracket higher. So far, he is taxed $9,875 times 10%, which gets you $987.50. Then you take the remaining amount of $20,000 minus $9,875, which is $10,125, and you multiply that by 12%, the next tax bracket, which gets you $1,215. Now you add up all the tax and Adam owes a total of $2,200. Compare that to $20,000 times 12%, which is $2,400. He is actually taxed $200 less every single year. Yeah, I bet you're more confused than the plotline of the Too Fast, Too Furious franchise, so think about it like this. You have these buckets, right? Each drop of water is equivalent to $1. Your income is this gigantic water tank. Once you fill up the first bucket with water, you start filling up the second bucket. Now your water tank is somewhat drained from the first bucket, so you'll be taxed less because your first bucket took some of the water from your water tank. Now you fill up as much as you can until there's no more water in your water tank. As long as you don't overflow the bucket, you are only taxed by that second bucket and the amount that second bucket contains. You add the tax from the first bucket and add the tax from the second bucket, and that's the amount of tax you owe every single year. Now, I will cover more taxes in future videos, but this is a very important concept for you to understand to earn yourself $50,000 tax-free. Next, you need to learn about capital gains tax. Now, capital gains tax is tax that you owe to Uncle Sam for buying and selling asset, in our case, stocks. Say you bought a stock for $1 and it had a great year. Now it's trading at $5. You did decide to sell that stock, so you take 5 minus 1 and $4 is your capital gain. Capital gains tax is determined by your income tax bracket. If you make $20,000 a year, you are placed in the 12% tax bracket and you are taxed 0% in capital gain, meaning the government will not tax you anything if you cash in profit from buying and selling stocks or collect dividends. Now, if you think that's too good to be true, you are right, because there is one condition you need to meet in order to be qualified for capital gain benefits. You need to hold on and maintain that stock or stocks for more than 1 year. That means if you buy on January 1st, 2020, you are able to sell January 2021 in order to be qualified for long-term capital gain benefits. Yeah, I know, waiting sucks, but that's how you make money. That's how you become rich. Next, you need to learn about standard tax deduction. All right, there's two types of deduction: standard tax deduction and itemized deduction. You really only need to know standard tax deduction right now, but I'll cover itemized a little bit later in future videos. So what is standard tax deduction? Standard tax deduction is the IRS reducing your income by a set amount every single year. For year 2020, the standard tax deduction is as follows. For a single filing, taxable income is $12,400. Remember Adam? This means Adam $20,000 is reduced by $12,400, which leaves him with $7,600. This would place Adam in the first tax bracket, meaning he pays 10% in taxes. So let's combine everything you have learned so far. First, let's assume you work and save $1.75 million. For simplicity, you want to buy one company in the stock market. You want to buy my favorite company, Raytheon, ticker symbol RTX. So you put $1.75 million into Raytheon. To make it simple on us, let's say it's trading at $65. So that will get you 26,923 shares of Raytheon. Now Raytheon pays a dividend of 0.475 cents per share per quarter. Now you take 26,923 shares of Raytheon and multiply that by the 0.475 cents per share, and you'll get $12,788.46. Now Raytheon will pay you that amount every single quarter. Now, you multiply that by 4 because there's 4 quarters in 1 year, and you get a grand total of $51,159. Let's move on. You have $1.75 million in your stock portfolio of entirely Raytheon. Raytheon pays you $51,153 every single year in dividends. Now, dividends is classified by the government as capital gains, and you're not going to sell Raytheon because Raytheon is a great company with high prospect, but I digress. It's my opinion. Make sure you do your due diligent research because you don't want to get scammed by the scammer on the internet. Anyways, dividends is classified as capital gain. Say you are single and retired and not earn any income beside your capital gain dividend. Take the $12,400 standard tax deduction, subtract that from your $51,153 dividend. Your taxable income is then $38,753. This will place you in the $9,875 to $40,000 area, the 12% tax bracket, which means you will be taxed 0% in capital gain rate. Thus, finally, you make $50,000 tax-free, not working. To help you understand this a little bit better, I include a link to a very interactive calculator that helps you determine the amount of tax you owe by plugging and chugging different kind of income, tax bracket, capital gain benefit, and all that good stuff. Of course, it's never that easy when it comes to life and money. There are some cases where some company would increase their dividend, decrease their dividend, even remove their dividend completely. Governments sometimes change the monetary policy to fit the mood of the American people. Like for example, the coronavirus right now, it desecrated the US economy and even the world's economy. Hopefully in the not too distant future, the US will change the monetary policy, hopefully a reduction in taxation, to help spark the US economy, because right now we're hurting bad. Well, that's all I got. This is more or less a theory that looks good on paper. However, I do want to test it for myself. So I'm going to work hard and try to achieve that $1.75 million in my stock portfolio. So currently I have roughly maybe 20,000 in my portfolio. So almost there. Not really. Anyways, I bet you there's gonna be a ton of questions on my math and everything I explained in this video. So don't hesitate to leave a comment down below and I'll do my best to address that to the best of my abilities. So like, subscribe, do what you want, and I guess I'll see you guys next time. Cue the outro.